Nvidia crushed earnings, yet it pulled back just like Microsoft and Meta, as well as Oracle. They beat revenue, they beat EPS, their future guidance was good. It was one of the best earnings they've ever had, and they've only missed earnings once in the last 10 years. Yet the market rally was cut short and it pulled back. So what is going on with Nvidia? Stick around, strap in, sit tight for this video, because I'm going to explain to you guys why there's a lot of manipulation going on, why there's a lot of uncertainty, and why this is the ultimate buying opportunity, because Nvidia is primed to run, so you don't want to miss it. And this is how my students and I printed so much money last April and May, because we positioned ourselves to make money when the stock market rallied. Strap in, we're going to talk about everything right now. The rally last April and May was huge, and my students and I made tens of thousands, hundreds of thousands of dollars per trade on stocks that just absolutely skyrocketed. Microsoft from 380 all the way to 550, SPY from 500 to 680. We also had AMD from 100 to 240. And not only that, in just a few short days, we made money on Meta running from under 500 to over 700. This was a very strong move. These were just a couple of the stocks that we made a lot of money on. We made money on Wayfair, Affirm, Target, Walmart, Hims, Robinhood, a lot of different stocks that just ran when the market ran. This is the time to buy. It's a buying opportunity. Let's talk about Nvidia, then the manipulation and why it's poised to run. And when it does, you want to be in. If you're confused by anything in this video and you want to make money when the market runs back up, and you want to make similar returns that we had back in April and May, but you're confused, you just don't understand it, you don't want to lose the opportunity, the link to get started in Discord is below. I offer a full training course, one-on-one coaching, Discord with trade alerts, discussions with 1,000+ members. We are all there and ready to go when this market moves. You don't want to miss this opportunity. Link to get started is below. Friday's market rebound was not built on anything solid, but something very ephemeral. Recent rallies in stocks haven't been built on anything solid, says Steve Sosnick, chief strategist of Interactive Brokers. Volatility on Wall Street this week was a reminder of just how frail conviction around the stock market has been. Every bounce was sold, every sell-off spiraled, and investors still were skeptical if it had bottomed. Then came Friday. Almost on cue, buyers finally stepped in, raising the question of whether the sudden rebound in stocks was part of the actual bargain hunting spree or just another end-of-week buying blitz in the otherwise fragile stock market. Every dip could be a buying opportunity, but what I'm seeing this week has morphed from a dip buying to a rally chasing, said Steve Sosnick, chief strategist of Interactive Brokers. We become so enamored with chasing the momentum that I think it creates an opportunity for air pockets, because those rallies are not built on anything solid, but something very ephemeral. And that also means they can reverse themselves very quickly. U.S. stocks on Friday came off an extremely turbulent ride on Wall Street. The Dow Jones, DJIA, and SPX logged a 4-day losing streak earlier this week before Nvidia's robust earnings report sparked a strong rally in the market. But that surge quickly flipped into the biggest intraday sell-off for the S&P 500 since April, as worries grew that the Federal Reserve would stand pat in December on interest rates, before stocks reversed again on Friday with a sharp rebound. Even with Friday's moves, the Dow and S&P 500 still logged their worst week since October 10th, with each losing nearly 2%. The Nasdaq Composite COMP tumbled over 2.7% this week, according to Dow Jones market data. Sosnick told MarketWatch that the wild swings in the stock market this week underscore how fragile investor confidence has become, with Friday's rally also appearing fleeting as the market's underlying fundamentals have barely changed. That could spell trouble for the days ahead. When you get this rally chasing, it could really put you on a very precarious footing in the market, he said. People buy dips only when they legitimately think the stocks are on sale for fundamental or technical reasons. But now they're doing it simply because the stocks are getting more expensive and they think they will be able to flip it to someone else who will pay more for that. Ben Fulton, chief executive officer at WB's Investments, said that the stock rebound on Friday suggests traders are still resilient as the rising sun, as they show up for the early Black Friday sales in the stock market. However, the problem is that the market recovery can be short-lived if early profit taking is experienced when the markets rebound quicker than expected, he told MarketWatch. This week's market action also saw investors rotating into traditional defensive corners in the stock market as riskier assets, as mega-cap tech stocks and Bitcoin became under pressure. The S&P 500's consumer staples, the healthcare sectors, were among the few areas on the large cap benchmark index to close the week higher. For the month, these two sectors surged 2.2% and 7.1% respectively compared to the 3.5% decline in the S&P 500 in the same period, according to FactSet data. Consumer staples and healthcare are traditionally viewed as defensive plays during periods of elevated market volatility. Gold prices fell off their peak but have still risen 2.4% so far in November, according to FactSet. Jim Baird, the chief investment officer at Plantmoran Financial Advisors, said the sector rotation is driven more by valuations and less about classic flight to safety trade, with money moving out of stretched megacap technology names and into cheaper parts of the market rather than a response to a stress in the U.S. economy. As valuations look pretty stretched in those big cap tech names, investors are starting to look for other ways to improve their portfolio and diversification and a little less tied to the AI story and position themselves in a more diversified manner, he said. Taking a little bit of those winnings off the table, particularly during periods of uncertainty, can help you sleep at night. Also, Evercore raised its price target on Nvidia to $352, projecting a 95% upside, citing accelerating Blackwell demand. Evercore's Mark Lipacis said checks show Blackwell revenue rose by nearly 50% quarter over quarter, totaling more than $13 billion as supply for GB200 and GB300 parts improved. He noted that Nvidia is building inventory to meet larger orders, with inventory up about 32% quarter over quarter and supply commitments climbing roughly 63%. Lipacis estimates that Nvidia has booked about $110 billion from its current compute pipeline, leaving some $390 billion potentially ahead in the incoming quarters. He expects revenue growth to quicken from roughly 56% in mid-2025 to about 79% in mid-2026 as deployments accelerate. Trading near 25 forward times earnings, Nvidia looks cheaper than its long-run multiples, suggesting the pullback may offer patient investors a buying window. We also have Kathy Woods of ARC Innovations, who bought 93,374 shares on Thursday, the first purchase of the chipmaker since August 4th. The trade followed Nvidia's stronger than expected quarterly results, which briefly pushed the stock up more than 5% before it reversed. Nvidia closed down 3%, $180.64 as the broader market fell and investors trimmed bets on December as Federal Reserve rate cuts. But as of November 20th, ARC held 505,395 Nvidia shares, making it the fund's 23rd largest position. The buy signals renewed intent from a high-profile active manager, but is a modest weighing for the ETF. Market participants said profit-taking and shifting rate expectations likely contributed to the late sell-off. The trades were disclosed in ARC's daily filings. Some analysts said the purchases likely reflects longer-term conviction in AI-driven demand. As near-term volatility persists, traders will watch upcoming guidance and macro data for clues on chip demand and the Fed timings. Nvidia's earnings show that they hit $57 billion in the quarter, surpassing estimates, with quarter four projected to be $65 billion, which is even more. Perfect guidance. However, stocks fell 3% amid concerns over high valuations and rising accounts receivable. Nvidia's CEO Jensen announced record sales of the Blackwell GPUs during the earnings call, highlighting that cloud GPUs are sold out, reflecting strong demand in the AI infrastructure. And Evercore raised its price target on Nvidia, like I said previously, to $352 with a 95% upside. Revenues up 50%, over $13 billion as supplies improved. Also, Trump administration is considering greenlighting the sales of Nvidia's H200 AI chips to China. The Commerce Department is considering approval for these chip sales currently barred to China. This could also change things for Nvidia. It will help the uptick in the price to Nvidia, which is very important because Nvidia holds a very large position in the SPY and can drive the market up, as we saw with earnings. This could be one of the big catalysts that we need. If they approve the chip sales to China, Nvidia will go up and the tech sector will go up. And unfortunately, we're in a situation where we're waiting for Nvidia to save the tech sector yet again, like they briefly did with their earnings. Now I'm going to get into the technical analysis on the chart and show you why the stock market sell-off that's been happening over the past month has pretty much bottomed out. And pretty much every single stock is showing signs of seller exhaustion, and now the buying is about to begin. But I also explained to my Discord, and I've explained it briefly here on YouTube many times, that there was over $60 million in dark pool data on Meta November 21st options and other November 21st options that were very high deep with dark pool data, but they had to fry those options and create a vacuum and a sell-off because they need to get into the market before the rates get cut. When you have interest rates that are 5%, 6%, you can leave $1 million in an account and you can make about $60,000, $70,000 a year. When the interest rates get cut to 4%, 3.5%, which is where they're ticking closer to every single month, then you're only making $30,000. When this percentage gets really low and you have lots of money, you move your money out of SPACs accounts and money market accounts and into the stock market, where you're going to make more money on dividend yields. And SPHD, KBYW, and things like that, or Ford or Verizon, Coke, or just SPY in general. And this is what happens. There is $250 billion that came over in April and May, which I told you guys would happen, and it did. And my Discord and I made a lot of money then. Now we've reached another sell-off. We were supposed to get interest rate cuts in November. We were supposed to get them in October. Data was delayed. The government was shut down, record-breaking shutdown over 40 days. Now they're saying we may not get interest rate cuts in December. It may be pushed off indefinitely, which also fueled the sell-off because big money wants to get in before the interest rates get cut. So the interest rate cuts just coincidentally get pushed off, then the market sells off, and now we've got a New York Fed saying that we should cut the rate, so the market kind of sparked a rally on Friday. When you think about this, it pretty much lines up with all the manipulation because they want to get all that big money in the same way they did in April. Call it what you will. It's virtually a semi-repeat of April and May of this year, and the last time this happened, and the time before. The same thing just keeps happening over and over. It's manipulation. Pretty much the same thing is going to stand valid this time as it did last time. You buy when stocks are down, you dollar cost average, and you hold long term, and when the stocks fly, you make money. You always buy when the stocks are down, not when they're up. There's risks with every trade, risks with every investment, and there's always risks at any given time in the market, which is why you don't put more than 10% of your portfolio in any one stock or any one sector. But this is a particular opportunity to buy stocks cheaper in the market because the stock market is beat up. Interest rates were on the cusp of getting cut again, and Nvidia, the biggest tech giant in the world, crushed earnings, but so did Microsoft, Oracle, Meta, and ARM. So pretty much the tech sector is doing well. There's just investor fear over valuations and AI demand, which is not the case. This fear is driven by Michael Burry and others, and as well as the overall sentiment of fear, which pretty much just follows the leader. When someone like Michael Burry puts out negative news and someone else puts out negative news of worry over valuations, then people start to sell. And the market drops a little bit in the AI sector, which it did. And then when it drops a little, investors get stop lossed out. Then when those stop losses get hit, you get slippage and the stock price drops. And then after the slippage, people get margin called, and it just creates a landslide of selling, which is exactly what has happened like it did earlier this year. Then you couple that with a government shutdown and bad news and tariff issues, and you get the market we're in today. But with the tariff issues resolving, interest rate cuts potentially on the cusp of being cut again, and us getting confirmation of that, and the tech sector crushing earnings, it's just a matter of time before the market recovers and it goes back up. So where will you want to be? I personally would want to be in Meta, Nvidia, Microsoft, and Oracle when this reversal happens. We're going to dive into the technical analysis right now, but before we do, however, before we dive into the technical analysis, if you want to be a part of this potential rally that is upcoming right now, and you don't want to miss any opportunity, you want to take action on your portfolio, and you want to understand what we did last April and May to make the profits you're seeing on the screen. I made over $250,000 on one account, $400,000 on another account, and I have students that made $500,000 in a month. And I have students that had portfolios that were under 100 grand that made over $60,000, 60% in less than a month, buying this massive dip, very similar to what we have now. If you want to get started in my Discord, my one-on-one coaching, my full training course, my trade alerts, my discussions, and understand how to grow your portfolio, let me show you how to do it. Link to get started in Discord is below. Click that link, register, book a call, my team and I, so that I can help you grow your portfolio. But don't just take my word for it. Let's take a listen to what my student Josh had to say. Doing, Josh?
Hey, Corey. Good to see you again. Thanks for having me.
Of course, absolutely. And a lot of people have joined the Discord over the past year and done so well. And the truth is, you're the inspiration for all of them joining, most of them, and growing their portfolios. But you were my first student from 300,000 to 800,000. But you hit some speed bumps psychologically, and we had to correct that.
Started just like everyone else. I came across Corey's videos pretty early on. I was just really impressed with your approach to everything. I've actually explored other ones before as well, and a lot of them don't work. And so I can honestly say from the results themselves as well, but just how much you've developed me through this time period, helping me come from someone who knew very little about options trading to someone who now has that foundation and the skill set and also the psychology and mindset far surpassed what I originally set out to do. I was a victim of the market, and now I feel very much as I'm someone who's in the market, trading the market.
How does it feel to be a part of the Millionaires Club?
Honestly, it took me a minute to just understand what it meant. It was one of those dream goals that you have as anyone setting out to start to trade and do this. But nothing really changes, to be honest with you. I think if anything, now I'm really excited to accomplish my goal. Going forward, it just becomes now let's set a new goal. It feels really good to have a skill set and have a goal and be able to accomplish it. I think everyone should take masterclass or advanced training, elite coaching with Corey. I'm really excited to keep contributing to Corey's community, joining our calls on the weekly basis, and then also being live in the Discord. I get a lot of energy out of it. We have a really great group, and it's all because of Corey. Anyone can do this. I did not expect to be someone who could become a millionaire trader. The reason why you want to work with Corey as opposed to someone else is because he truly cares. He's just as invested in you, in building your skill set and training you to become a very good and profitable trader. He actually builds a serious program. He adapts to all different types of traders, no matter what they are, whatever their own personal goals are, whether you're in the retirement stage or you're someone that's really trying to build wealth and actually become like an active trader yourself. Corey's community is awesome. We have fun together. We also share ideas and trade and that sort of thing, trading overall. It's about making money, right?
So you heard my student Josh had to say, if you want this to be your success story and you want to live your best life like I do, I'm able to buy the cars that I want to buy. I got an Evo 8 FL5 Type R, a G80 M3 SVR Land Rover. I bought a new house. I love cars. I'm able to take my passion outside when I'm not working and just enjoy these things about life because I'm living my best life, and the stock market has allowed me to do that. And I have students doing the same thing. I have students like Steve who's traveling on a boat all over the Florida Keys and all over the oceans, just enjoying life, traveling the world. I have another student named Flute who's traveling all over the world himself. And I have other students that have been able to retire, move on, and make money like Doug, Mike, and other students like Josh, Matt, Tim, who makes over $100,000 a month in the average months in the Discord, and in the bull market last April made over $250,000. This list goes on and on and on. We could be here all day talking about it and looking at it, but if you want this to be you, you can get started by clicking on the link below, and I look forward to helping you on your journey. When you look here at the technical analysis on Nvidia, my DFib, D-Stochastics RSI, and my AVP show that we are literally right in the middle of the AVP, middle to top of AVP, and we're also below all the averages. The market breadth has also really become bearish over the past month, and it's got a pretty big dip here, and the greed has actually increased because Nvidia has crushed earnings. But not only that, we have dividends coming up, and typically the third week of options is kind of rough anyway. We have Thanksgiving, Black Friday, we have all this news that's going on in the market. There's a lot of stuff happening. When you look at the overall chart and with the upgrade of Nvidia, you can understand that the average weighted price and my AVP, which is what I teach students in Discord. If you want to learn AVP, definitely want to jump in Discord. Very powerful, better than Bollinger Bands, based off hedge fund and dark pool data. It's taken years to get it right, and it works very well. And when we look at Nvidia, the AVP on Nvidia is between 170 and 180, which is right where it's at right now. And typically when this happens, stocks do this number and then they start to run. And when they actually have this run, you want to get in down here. And the AI demand on Nvidia is actually increased. They crushed earnings. And this is going to be across the board. AI demand is not going anywhere. Right now, there's just a lot of manipulation, a lot of selling. They had to drive the market down to get in. And you can see that we're trekking along this line of support that goes all the way back to July of 25, even though they just got upgraded yet again. And when we look back to summer of 24, we can see that the stock peaked in the 140, 145, 150 range. So the stock very well could potentially dip to 150, 160 before it runs, although very unlikely. It could still happen, but it depends on the amount of fear in the market. When we look at Meta, even though this video is not really about Meta, just as a general synopsis on the market, you can see how Meta dropped very sharply, and then now it's kind of rounded off, and then you get this kind of notion right there, that the stock is going to start working its way up. You can see the decline here was very steep, and then now we've kind of slowed down in this consolidation. Typically, consolidation periods can vary, but they usually range from a few weeks to a month, maybe 2 months, and you can see that is happening right here. So anywhere in the next week or two, next week and the week after, the stock is going to start moving its way back up, likely. But they also lost someone on the AI team. And not only that, the AI demand and the AI driver, so to speak, the buying has cooled off. But we also have to think that earnings is in 74 days. So it's likely, with earnings being on February 4th, that the stock will probably stay pretty cool until mid-December. Then it'll rally before Christmas. There'll be some selling for the first 2 weeks of January, and then another rally going into earnings, because there's always that witch hunt for tax loss harvesting. So next week, we could have a little bit of a rally on rate cut news. Going into December, if we get rate cuts, the stock could end up somewhere up here. Then a sell-off for January, and we hold in the mid-6s, which is very possible. A nice run-up, sell-off, and we're holding somewhere in the 650 range for the first few weeks of January. Maybe it pulls back 640, and then on earnings, a week before earnings, the stock will run a little bit. I personally don't think there's a high probability that Meta will run back to the 7s prior to earnings. I think we're looking at 630 to 650 by Christmas. Then in the new year, a sell-off, it comes back to 625, 630 from wherever it may be. And then the first few weeks of January, the selling and the tax loss harvesting, but then the stock will go up end of January for earnings a little bit, maybe back into 640, 650. There'll be some profit taking. If they miss earnings or there's anything negative, the stock will likely come down. But I don't see that happening because they crushed earnings this previous time, and they just took a tax hit, which was a one-time deal. So I think investors are waiting for another earnings to crush without the tax hit, which is pretty much what a lot of people are thinking and why they're selling off and not buying just yet. So if they crush earnings again, there's no tax hit, the stock will very likely spike up, and that's where we're going to see the return to 700. Nvidia, same thing, very similar. Except we're not waiting on earnings. We already had earnings. The dividends are coming up on the 4th of December. They're not very much, so they don't really have much of a play in this stock. But we do have to look at the fact of the market and AI. So this week and next week will be pretty decent, in my opinion. I think it's going to be decent because we're waiting on rate cuts. And if we get an announcement of rate cuts, that's going to be better, and the stocks will go up. It's also the last week of the month, Thanksgiving, Black Friday. There'll be some shakiness in the market, but I believe it'll be more bullish than it was last week. It'll definitely, to some degree, be an improvement. We have data coming out this week, quite a bit of data, which will also play into it. So if the data is good, that'll boost the confidence. And not this week, but next week will be even stronger, and the stocks will come up going into Christmas time. So we could see Nvidia pushing 199 to 200 by the end of the year, potentially. And then there'll be some selling, and the stock will dip back into the mid 190s, maybe lower because the tax loss harvesting. And in my opinion, it'll run after that. And as we go to the rest of January and in February, the stocks could consolidate at their newer highs and work their way up. But this rally could also be shorter lived and slower and more stagnant, where there could be a little bit of a run up in the next week or two, and then just kind of hold steady through to March and April, and then it runs, because typically April and May are good months of the year. So is November. Typically this month has not been good. There's been a lot of data, and the government shutdown and the delay of data has ruined that. So you want to keep all of this in mind.